Bitcoin just lost a key level, and this time it may not be about charts, it may be about war, policy uncertainty, and fear. The headline is simple. A new US strike on Iran, combined with fresh uncertainty around Trump's comments on China, is pushing markets into risk-off mode. And when investors get nervous, they usually sell the assets that move the fastest: stocks, crypto, and especially Bitcoin. Here's what's happening. In the short term, geopolitical escalation in the Middle East can make global markets more fragile. At the same time, any renewed tension with China raises questions about trade, tariffs, supply chains, and growth. That combination tends to strengthen the US dollar and push traders toward cash and treasuries instead of Bitcoin. Why does that matter for Bitcoin? Because Bitcoin is still widely treated like a risk asset during panics. When leverage gets unwound, crypto often gets hit first. That's why we've seen Bitcoin slip below $63,000. It's not necessarily a sign that the long-term bull case is broken, but it is a sign that traders are becoming more defensive. Now, here's the bigger economic picture. If this conflict stays contained, the impact may be temporary and mostly event-driven. But if it spreads, energy prices could jump. That would feed inflation expectations, complicate the Fed's job, and keep interest rates higher for longer. And that's usually not a friendly environment for Bitcoin. On the other hand, if this turns out to be a short-lived shock, Bitcoin could recover quickly once fear fades. Crypto tends to move hard in both directions when uncertainty spikes. So the key question isn't just, is Bitcoin down? It's, is this just a headline shock, or the start of a broader macro shift? If you want real-time Bitcoin and Fed analysis that cuts through the noise, hit like, subscribe, and turn on notifications, because the next 90 days could matter a lot more than most people think.